All right, so maybe you got recommended this video and you're wondering who the hell is this bald guy wearing sunglasses in his condo talking about growing $50,000 to $100,000. Let me show you because this is actually the seventh time that I've done this. So I'm going to go ahead and take you into my free Telegram channel, which this free Telegram channel, I've been running this for 5 years. There's over 50,000 people in this Telegram channel right now. A little secret between you and me, it's the first link in the description. I literally just share all my analysis and trades in here and have been doing it live for free for 5 years, back into like summer of 2018. Here's the last account that I did. I'll mute it. But essentially, I started this account a little over a month ago. So from the moment the amount of time it took me to grow this account from $50,000 to $100,000 was 1 month and 2 days. So the initial funding was on the 22nd, right there. And then on the 22nd, the first trade was on the 23rd of June, 2023. And then you can go, this is in the Telegram channel, just for the sake of time, I'll fast forward through here. That's every single trade, and every single one of these trades I have called live. The whole process of growing the account. You can see the account, the deposit was $50,000. The broker took like fucking $58 for some stupid reason, or internal transferring it or whatever. But the profit was $56,000. I paid about $6,500 in fees and commissions, leaving about $100,000 in the account. So after fees, after commissions, after swaps and everything, and the stupid $58 highway robbery that they took from me, the charge for internal transferring, the account was left at $100,000 with no open trades. This is it. Now, this, like I said, this is the seventh time I've done this. And one thing that I got to point out before I even continue with this video is that trading is super risky and you are probably going to lose money and you shouldn't listen to anything that I say. You should leave this video right now. I'm some bald guy yelling at you in a YouTube video with sunglasses. And, you know, I'm actually going to get a lot more up close and personal with you guys. I'm actually going to take off the sunglasses portion to reveal my actual eyes. That way, you know, I'm some sort of a human being just like you. And we're going to go in behind how I'm actually doing this. I don't know what the hell's going to work for you. All I can share with you is what seems to work well for me. I don't really consider myself to be that great of a trader. I've just been trading 7.5 years, and this is what works for me. So let's go ahead and get into it. Here's how I structure everything. I sell courses that cost thousands of dollars, but you don't have to buy a damn course for me at all to learn any of this stuff. I'll just literally show you it all right here for free. In fact, let's start with 2 trades that I'm in right now. How about that? So I start by just zooming out. I go to the 1 hour, 4 hour daily. I use all time frames in combination, but as a super oversimplistic approach, I look at a chart and I ask myself what I think is likely to happen next. That's it. All I really use is support and resistance. So I'll trade breaks and retests of support resistance. I'll trade simple bounces of support resistance. And I will also trade support resistance level failures. So if I think price is going to break past the support resistance zone because it came to the support resistance zone and it failed to bounce and it's just going sideways and it looks like price is just going to like spike through it. So I'll trade all those, but it's all based around basic support resistance and price action. I have tried everything in the book. I have tried this smart money, Wyckoff, liquidity order block, bank manipulation, Wagyu beef, candle distribution, accumulation strategy. Seems really complicated. I've tried moving average strategies. I've tried Bollinger Bands and dynamic support and resistance using moving averages and stochastic oscillators and RSI. I've tried all sorts of shit. All that stuff works. Literally everything. Everything works in the right context. However, since everything works, I thought one day to myself, like, you know, price is just going to go up or down. If you enter somewhere random on the chart, whether it's a buy or a sell, with a 1-to-1 risk to reward ratio and a 50% win rate, because that's what you have statistically, it's just going to go up or down. You have a 50% chance it'll go up and a 50% chance it'll go down. Therefore, it didn't make sense to me years ago to have a trading system that's super, super complicated, where there's all these moving parts and you're doing so many things that do not matter at the cost of the things that do matter, which is keeping things simple and controlling risk, having a risk structure to where you're able to actually be able to do this stuff consistently long-term on a predictable, sustainable level so that you can actually have consistent profits. Now, again, this is just what works for me. I'm just reiterating that. I don't know what the hell is going to work for you. You have to do all the testing and optimization and improvements and personal development to develop the skill set of trading yourself. I'm just going to give you maybe a few pointers about what I do, and then you can do whatever you want. So over here, I thought price was going to go down. Price was going in an uptrend. Price broke out of this little uptrend structure, made some lower lows and lower highs, came up, found resistance right here, failed to go back up, and instead came down and broke the previous low. So I just thought this morning, I thought that price was going to continue down from right here down to here, to this next big support zone. And so what did I do? I just entered a sell this morning, and I put a stop loss above these highs right here, and a target simply down lower. That's it. Now, the way I make money is by adding to the winners and scaling out of the losers rather quickly. My average losses are anywhere from 1/4 to 1/2 of what the actual original stop loss was. The wide stop loss just gives me a way to size my position appropriately, and it also gives me a way of managing the trade way before it ever even gets there. Instead of having really, really tight stop losses where you're very likely to just have consecutive stop outs over and over and over. It's so freaking annoying whenever that happens. So I've just found that didn't seem to work really well for me, so I just use wide stops. Whether I was using hedging as a risk structure like I used to, whether to use stop losses as a risk structure, or whether you use maybe no stops at all and you just set alerts and you decide what to do. You still have to figure out how you're going to size your positions if you do that. I just keep it simple. I have a set percentage risk per trade, and then I just know what my metrics are. I know what my average losing streak is. I know what my average loser per trade and per setup is, and I know how much my average winners are whenever I do have a take profit met. So what I'm doing on this trade is I've entered this trade. I've entered a sell. And then what I'm going to do if price moves against me, so let's say it goes up here and it breaks this previous high right here. What I'm going to do is I'm going to start probably scaling out of the position. If it goes up here, what I will likely do is like probably close half the position at a loss, if not the whole position, and wait. And then if it goes up and then it starts ranging sideways, then I'll be out of the full position regardless of whatever I do initially. If price just comes up here and bounces this resistance and comes down, I'll stay in. If price quickly swipes above the zone and then quickly comes back into the zone, I will stay in the trade. And if I would have closed it up here the moment it broke the zone because I think it's going to break, then I'll just re-enter immediately if it comes back below the zone and looks like it's going to continue down. It's a matter of looking at price action and looking at where price is likely to go based on the path of least resistance. And all I do is I just use support resistance to do that. It's not that complicated. It's like it got to this support zone. It's failing to bounce. I think it will break below it. It's the same thing that's happening right here today. This is a major, like, big support zone. Price has tried bouncing twice right here, a third time right here. Now we've had a really, really deep test of this zone. If you try to like pinpoint the support resistance zone, it looks like it broke and retested this zone, so it's failing to go back up above the zone. So I just think it's more likely to go down. You combine that with the whole fact that we've cracked out of what appeared to be this little like uptrend direction, and you combine it with the fact that we've like broken, retested this major level right here. There's just multiple things pointing to the idea that this is likely to go down. And I just put it all together and I just decide, all right, I think it's going to go up or down. Now, when I'm wrong, I've already showed you how I'm going to like scale out of this trade if I'm wrong. When I'm right, I add to my winner. So here's what I'll do. If this comes down into here and goes right here to this alert, probably a little bit lower, what I will do is I will add to this position. So here's what I do. On my Mac, I take one finger, I click the command button, and with my other finger, I click, and then it causes me to duplicate this right here. Or if you just wanted, you could just click clone, and then boom, right click, and then click clone. So I get the same thing. So I'll add right here the same lot size, and then what I'll do after I've added a position here, on the first position, I just move it to break even. That's it. Now, let's look at what the outcomes can be. If price just continues dumping down here to the target, I can close everything down here at a net profit. But if that doesn't happen, price pushes up, it knocks out my first position at break even, and then I'm still essentially in the same trade. My only real loss was having lost whatever open profit I had on the first trade. That's it. That's my only real risk. Now, 75% of the time, price will come back and go break even, then maybe the original trade works out and, you know, whatever, and it's all fine. But like 25 to 30% of the time, just from my experience, my data, my results, my baskets of trades, looking at the history and everything, this works about 25 to 30% of the time, it goes into a huge profit. So when I'm right, I make 1, 2, 3 times whatever it was I originally risked. Let's say, for example, each of these are a $4,000 risk. If just this one trade goes into profit, it's $4,000. And if it screws up and it goes up here and I close above these highs, that's like a third of the way to the stop loss. So that'll probably be like a $1,500 risk or something like that. And so for me to lose, I'm losing like less than what I'm making on my winners. But on top of that, it's not even me maybe risking a third of this to actually make one full unit of risk. It's actually even better than that, because if it does go into profit and I'm able to add a position and both of those go into profit, sometimes I make double, triple, whatever it was I was originally risking. And whenever you factor in the fact that I probably won't close a trade at a stop loss, I rarely ever have a stop loss hit. Yeah, I mean, as evidenced by the actual data right here. You can see stop loss orders filled. We'll go ahead and we'll look at how big the losses are. So the losses, this was like 2,300. The wins are 2,500 and 3,000, 3,000, 3,000, 3,000. We'll fast forward it into like maybe midway through the account as it was growing. You'll see losses here. 3,000, 2,000, 1,000, 1,000, 200, 200. And then we go have a look at the winners, and we see the winners are like 5,000, 3,000, 7,000, 3,000, 4,500. We'll go down a little bit further. 4,700, 8,000. One trade USD CAD, $8,000 with scale-ins as well. This is where I added multiple positions and it all worked out. It gets to be insane. This was like one trade here on the 12th where I had 3 positions on USD CAD. And these 3 positions, as I continued adding to my winner, went down at a huge profit. That was probably the first entry there. The second one was probably this one. And the third one was probably this one. And it just, it's crazy. It's really insane how you can make a lot of money by adding to the winners. So that's the thing that all my trades have in common. When I lose, I tend to lose small. Whenever I win, I tend to win big, at least bigger than whatever the losers were. So that's Euro New Zealand dollar. We'll go through the same thing on Euro AUD. Pretty much the same thing. Price just looks overall like it's going down right here. So that's the first thing. The second thing is we have a break and retest here, this major level. Typically, if price breaks a major zone where it had a nice bounce at, it'll break below it, come and test it as resistance. And if it tries to bounce, it's likely price will go down, at least bounce away to the previous low, and in most cases make a lower low if it looks like there's like a nice direction. In this case, it looks like we do have a direction with lower lows and lower highs, so that's why I'm just going to be holding to a lower low. If I'm wrong, the worst case scenario is that price goes all the way up here, knocks out the highs, and I take a stop out for -1 unit of risk, which for me right now is $4,000 of risk. If usually, like I said, that's not going to happen because I have an alert just above these highs to liquidate the position, most likely, depending on what the context is, if it cracks these highs right here. And so it allows me to like not bet the whole farm on every trade and not lose everything so quickly. You know, I can suck at trading over a long period of time instead of just blowing everything in one trade. So my risk structure is very, very high because I do risk high amounts per trade. If it's a very small account, I risk 20 to 25% or more per trade. If I'm starting the account at like 50K, like I did this account, I started that at only 10% risk per trade. I was only risking like 5K in the beginning per trade, like 3 to 5K. So actually anywhere from 3 to 5% risk, which is, I consider that still pretty high. And as it got closer to the growth target towards the end, I started risking more. I got to 75K. I started risking 7,500 per trade. It got to 85K. I was risking $10,000 per trade towards the end of the account as it approached the growth target. And a lot of those trades, I didn't even have to hold all the way to the targets because I got so close to the growth target. But you can see right here, a lot of these trades, like the Euro USD trade, I closed that early. I risked $10,000 to make only 6K on that. Euro JPY, I risked $10,000 to make only like 2,000 under that. So that's like an inverted risk to reward ratio. The only thing that matters is that you're making contextually appropriate trading decisions, and it just takes time to learn. In this case, I'll close it if it breaks above this high, and I'm looking to add if we move down here a little bit lower, because if we can add, if price moves down lower, I can add this second position. I can move the first position stop loss to break even. And then if they continue ripping down like crazy, I'll end up having a nice winner. And if not, then I'll have a loss, and that is perfectly fine. There's nothing wrong with that. Losses are going to happen. There is no way to avoid it. So there's also a couple other trades I'm looking for. Like, look how simple this is. Price is moving in a downtrend. I'm just waiting on a pullback, and if it pulls back and then starts to kind of turn around, I'll get into a trade. It'll kind of look like this, with a stop loss above the recent highs at resistance and usually a 1-to-1 risk reward. And if it starts moving into profit, I'll look to try to get out of it early and a little bit smaller of a loss, depending on the context. And if it starts moving into profit, I'll just add to it. And then if it continues ripping, I'll make 2. Sometimes if I can get a third position added, I'll make sometimes 3 times what I originally risk. It's absolutely insane. Euro GBP, same thing. This one's already setting up. I think this is going to continue going down. It's already broken and retested a major daily level right here and failed to break past it. So I just think it's likely to come down. So I'm just waiting for it to come back into the resistance level. We've got the kind of the wind at our backs here with this downwards momentum, and it just, you know, feels like a trade that's going to work. And if there's nothing in here, if there's nothing that I see as like worth trading, then I just simply don't trade. Since I'm risking high risk, all I like to do is put a lot of money on the stuff that I think is really likely to work, especially when I get in and then it actually begins moving into profit and begins showing me evidence it's working. I like taking those trades and just adding like a complete effing degenerate. I am known to sometimes be in 3 to 4 trades at a time. I call all the specifics of these trades out in my close friends group, which for right here, let me see if I can scroll back to this because there's been some crazy stuff. All of this in here, this is all kind of like, it's like a history of every single thing I've done. All the specifics as far as entries and like the exact lot sizes, the actual stop loss, take profits, the account equity as it grows. I'll show the equity. So this one, the last account that I was just showing you here of growing this account from $50,000 to $100,000. Like this whole account, every single trade that I take, I call here in my close friends group, and I share all the details and specifics too. And people can also ask me anything in here. So that way we can have like conversations about everything. People ask me questions. I respond, everything like this. So it's a place where people can like see exactly how I'm trading with every detail and be able to talk to me personally and ask me questions. Something that most gurus don't even do. So with this right here, this is me taking all these trades. It's just to illustrate that every single thing that I do is like live. And I've been doing this for 5 years. I've been doing this forever. I've been doing this since I got profitable. I started the free Telegram channel after I got profitable in like 2018. And then I started the Telegram, I think it was like summer of 2018. And I just started calling all my trades in there. But it's the same thing I've been doing for years. It's just literally showing everything live as it happens. You can pause this video. This is literally just showing you like the past month of this. It's literally all in here. That's absolutely insane. I don't know who else does that here in the niche. I'm sure there's probably some people, but I just haven't seen it very often. I'm going to give you one more example as like a takeaway for something that you could try going and doing this on your own. Whenever you're going to a chart, just recognize that price just goes up or down. It does not matter if you're right or wrong. All that matters is whether or not you make money. I'm going to say that again. It does not matter whether you're right or wrong about a trade. All that matters is that you make money. And how you make money is by making a little bit more when you happen to be right versus the amount of money you lose when you happen to be wrong. All I personally do is I just use support and resistance. Support and resistance helps me make decisions as to what's likely to occur. And then a basic logic behind price, such as like if price was making higher lows right here and going up, and then it's pulling back, making a higher low, made a higher high, pulled back, made a higher low, but then, oh shit, we tried to make another higher high right here, but instead of price making a higher high, it failed and made like a little lower high, and then it came right back in here, started crashing back down to the zone. The zone is less likely to hold as support the second time, especially if price starts doing something like this, where it comes into the zone and then tries to bounce, and then it starts slowing down, tries to bounce again, starts slowing down, and it just starts going sideways. Those are usually trades where price is likely to flush through the zone. So I'm able to avoid a lot of bad trades really, really, really early just by getting the hell out based on the price action. It's something that takes time to learn. You have to get experience seeing this stuff over and over and over and over and over again. You can get a lot of experience just by going to my Telegram channel and following all my daily and analysis stuff that I share for free. Again, so these were trades, like I share my trades in here, but I don't share all the little specifics. I have to save something for the paid clients. Otherwise, like it wouldn't make sense to have a business and be making all these videos and stuff. But I share like literally, and oftentimes I'll still even show my actual like trades and terminals and the actual ones I'm in and the specifics. But usually what I'll do is I'll just post a screenshot of the trades that I'm in. And then you guys are free to just look at the image and then figure out, okay, if that's the entry, that's the target, that's the stop. You can figure out how many pips it is in distance for loss and how to calculate stop loss based on whatever it is you want to risk. I do very high risk. I cannot recommend it to everybody. It's only for people who are complete degenerates who are willing to literally risk all of the money that's in the account to try to grow the account. I'm not the type of dude who's like 1 to 2% risk per trade per account. I'm the dude who likes to, I just have a lot of capital, a lot of cash, and then I just put a small amount into an account. So for instance, I'll start like a 50K account, which is a small amount of my trading capital. And then I'll do like an account where I risk a lot of that account to grow it. It's still a small percentage of my total trading capital, but I'll put a small amount to the account because with FX, you could just use leverage and then you can just grow the account with the leverage. You don't have to put $1 million into a trading account. You could put, in my case, like 1/20th of that. I can put 50K and then still be able to like use the same position sizing and everything. It works the same way with stocks. My system isn't really too different for stocks, except I'm only long. I trade in a complete cash account with Robinhood, this is today, I'm down 700. This is the past week, I'm up 1,500. And this past month, I'm up $23,000 trading stocks. And I just do the same shit. I wait. I look for good trades on good companies where I think price is likely to go. For example, I'm going to buy on Microsoft right now. I'm down $500 on this, 1%. Here's why I entered the Microsoft trade. Look how simple this is. Let me clear all this out. So Microsoft is right here. Here's why I entered the trade. Price is moving upwards, and it had pulled back a lot. That was the whole reason. Plain and simple. If this trade worked out, I bought $50,000 worth of it. So if it worked out and it came up here to the previous high right here, the percentage move on that would have been like 10%. I would have made $5,000. This trade is still open at the moment. And so right now, currently, I'm losing $500, 1/10 of whatever the potential is I intend to make on it if it does work out. And then if it pulls down here a little bit lower, then starts to bounce somewhere down to here, I might consider adding in another little bit. If I think it's going to break these zones and continue lower, I may consider just liquidating my position. It's all contextual. But I think that the only way that most people are going to get to profitability is by keeping things ridiculously simple and controlling risk in some way. You can have high risk, you can have medium risk, whatever the hell that is. You can have low risk, whatever the hell that is. It's all arbitrarily and self-defined by you. Just risk whatever it is you're comfortable with. If you have a small amount of money and you're willing to kiss it all goodbye and just risk it, like risk the whole farm for like growing the account, that's your decision. You know, you get to decide. Me, I don't do it that way in terms of total trading capital. But I am a dude who says like, look, I know what my average losing streaks are. I know what my metrics are for my average wins, my average losses. I know how many trades it normally takes for me to double an account. I have all my metrics in place. So I'm comfortable doing high risk per trade on a relatively small balance using really insane position sizing. Like you say, starting a 50K account, risking $5,000 per trade, that's 10% of the account gone if it hits stop loss. Normally it's not that much. Normally it's only like 2 or 3K of loss. It doesn't actually get to the stop loss. But still, by the same token, it's high risk by most people's standards. If you'd like to learn more and follow me live, just follow my trades and analysis live in the Telegram channel. And it's the first link in the description below. I sell courses, a subscription product where you get to trade live with me every day if you want. Follow my trades. And those are the second link in the description. But definitely at least check out the free Telegram channel. It's a great resource to anyone wanting to learn how to trade. Just remember, I don't give financial advice, and trading's risky, and you're probably going to lose all your money, and you shouldn't listen to anything I've said in this video. So see you in the next video. Have a good one. Bye.